Hey everybody, welcome to the morning market briefing. It's Tuesday, June 21st, 2022, coming up on the midpoint of the year. Hope you had a good weekend. Apologies to those joining the call yesterday. It was market holiday, so no call. But we will be here today. We'll be here tomorrow, Thursday, Friday, all that good stuff. Back to the regular routine here, at least up until the 4th of July, which we will be off as well. Looking right now, getting a little relief on the equity side. Dow futures up close to 1.5%. S&P futures up a little more than 1.5%. NASDAQ futures up a little more than 1.5%. Oil up about 2%. So seeing some optimism in the market, and we're going to try to figure out why exactly that is. Goldman, though, has said that they see a higher risk of recession, a 30% chance of recession in the next 12 months, 25% chance of recession beyond that. Their overall probability is 48%. Been continuing to see banks, economists, analysts be pretty slow to draw the conclusion that this is probably happening and arguably already happening. We'll wait for the data. What are they observing that has bumped their chances up but not bumped them up all that significantly?
Goldman's been exceptionally slow the whole time, and really a lot of the economists have been very slow. I think that they're seeing the declines in real disposable income. I think that they're seeing the signs that everybody's seeing. Elon Musk was talking about a greater chance of recession in the near term over the weekend as well. We know that there have been upticks in jobless claims. We sent out the market memo and noted that on Friday. Bottom line is, I think we're already in recession, and this is kind of calling a recession after it's really taken place. I mean, we've been in a recession right now since probably February. I don't know if January we contracted, but certainly began to contract in February. I think right now we had the negative 1.5%, 1.6% GDP in the first quarter. Right now, the Atlanta Fed's sitting at 0.0% for Q2. But that only includes predominantly April and May data, and not even all of the May data. Right now, and we'll talk a little bit about this later, but the residential investment side of the GDP is really beginning to fall off. And we're going to talk about this when we talk about Lennar earnings. So I think that June is potentially going to be a pretty bad month in terms of GDP growth, which could really dramatically take down that 0.0% estimate. I wouldn't be surprised if we're down 2% in Q2 by the time all is said and done. But again, once we report that, it's all old news. So the question now is, we have to start thinking about what's happening in Q3. And I think that at this time, we're kind of through the earnings season from Q1, and even the late earnings reporters from Q1. We had Adobe last week as well. And I think we now have a little bit of a window where we can look forward to what's going to happen in mid-July. Now, I'm not expecting any great shakes from companies reporting in mid-July, but you could begin to see some people eye a window trade. There's been a lot of pessimism in the market. And when there's a lot of pessimism, things can be bad, but maybe not quite as bad as the market's pricing in right now. And I think we could be set up for a little bit of a relief rally. It seems like that's what's happening today. We'll see what happens with that, see if it continues. But historically, we can see some rallies into the end of the month, into the end of the quarter.
It makes me wonder with Goldman and the like. I mean, we've talked about this repeatedly, just the refusal to recognize recession. It makes me wonder how much relief we could even expect in Q3, because if they're looking at this so far out and saying, hey, there's a higher chance of recession going out, over the next 18 months, call it, you'd like to think they're right about something. Maybe they're right about Q3 and Q4. I think you've got to be very careful on that. You don't want to chase. You want to stay disciplined. You want to stay tight on targets. If we get that rally, be trimming kind of as we go up, especially opportunistically. Things move more than they probably should, and maybe move in misalignment to whether it's guidance, whether it's announcements they've made, whether it's trends we're seeing. You got to just stay, I think, incredibly disciplined to take advantage of that relief rally, but also not get overextended. Meanwhile, Jim Bullard, the St. Louis Fed president, has come out with comments on inflation. Seems like a relatively honest assessment. Bullard's caught a lot of attention for kind of going the opposite way of what the Fed has said, at least on paper. But his view that there's a divergence between actual inflation readings and the expected inflation is spot on. We continue to see that. I mean, even when we heard from the Fed last week, it felt like their inflation expectation was very off base. How much merit do you give to Bullard's comments?
He's kind of speaking out of both sides of his mouth at the same time, because he is saying that they are in an issue where they need to get more credibility on inflation. Having said that, he says that the effects of the forward guidance on inflation are already beginning to have an impact. So I'm not sure exactly what data he's looking at, or if it's just projections, how he's getting there. But he seems to suggest that, yes, inflation is a real problem. Yes, it's straining the Fed's credibility. And he has a lot of confidence that inflation is going to come down and the Fed's going to do its job. I think that in terms of his assessment of where we are right now, I think it's very accurate. In terms of his projections, who knows? Because these projections change all the time. He does say the U.S. labor market continues to remain robust. I continue to think that we're beginning to see some cracks in the edifice there, but we'll see what happens as far as those jobless claims come when they come out on Thursday.
Biden's come out and talked on a couple fronts. The tax holiday for gas, student debt piece on the gas tax holiday, which would save consumers 18.4 cents per gallon. He says, I hope I have a decision based on data I'm looking for by the end of the week. Very curious what data he's looking for. And, you know, it's an idea. I don't know how much that really helps. I mean, I think demand is relatively consistent on gas, regardless of that discount. I mean, there's probably a case to be made that, yeah, this will be short-term relief. I think they probably need to get some kind of win from the administrative level. He's meeting with executives later this week from oil companies, and he wants to know why we're not refining more oil. Ben, it seems like their answer probably would be something along the lines of, because of you and your policies. But what else are they going to tell them?
Yeah, there were a lot of old refineries that were refineries that were shut down during COVID. They weren't as efficient. They were dirty. They weren't up to regulation. And then you're not going to build a new refinery in this climate. So, yeah, I think that's probably what they'll tell him. And I think that there won't be a meeting of the minds. Yeah, I think that those two are going to have basically agree to disagree. I did think it was interesting that he's now making a big push right ahead of one of the busiest travel seasons, driving seasons of the year, meaning July 4th. So I think that's a really interesting thing. If you have a federal tax holiday right before July 4th, that's going to have some benefit, at least in the near term, on the polls. I do wonder, we had a big collapse in oil prices last week. And I do wonder to an extent if that was almost an accelerated release out of the SPR, or I don't know. It definitely bucked the trend.
It seemed artificial in a way.
And I'm curious as to why that happened. And I could tell you what I would do if I was in President Biden's shoes, is I would unleash as much of that oil as I could right ahead of July 4th and get that price down. That's what I would do. I'm not saying that's what happened, but it would logically follow.
Yeah. On the student debt side, he says they're nearing a decision to cancel some federal student debt by way of executive order. Could also have another extension on repayments, everything on the table. A hot button issue, I think, especially for voters, for young people, you know, kind of a bit of a backdoor stimulus in some regards, in some ways. And he's also talking with Larry Summers, former Treasury Secretary, and comments that there's nothing inevitable about a recession. Again, it'd be easy to nitpick and say this guy don't know what he's talking about, but it kind of seems like nobody knows what they're talking about. Goldman says it's a 30% chance. It's not inevitable. So kind of on the same page there.
Yeah, I agree with you. I think that these comments were made kind of off the cuff. He was on the beach in Delaware. He wasn't really putting a ton of thought into the responses here. So on the student debt side, I don't think there's essentially an update. With the gas cards, I don't really think there's an update. Federal gas tax holiday, I think, might be coming. And then as far as, I do think he talked to Larry Summers, but then in justifying why a recession is not inevitable, he then proceeded to talk about, and I quote, I think we're going to be able to get a change in Medicare and a reduction in the cost of insulin. And so if that's what is keeping us from a recession, I think that's foolish. We may avoid a recession somehow, I guess.
That's probably not the path.
But that's not the path.
Yeah.
frankly, I think that a recession is much more inevitable than a lot of other people would say.
Yeah, I don't think there will be books written about this period in time in which historians and economists alike agree that, wow, had we not cut the price of insulin, we would have been in a recession, but we saved it with insulin. Lennar reported earnings. EPS came in at $4.49, expectation $3.99. Revenue looked pretty strong. Backlog on a relative basis higher than expectation, but we're starting to see a bit of slowing. Ben, what's that look like, and how would you kind of quantify that as we try to reconcile interest rates, the economy, all of that with new home purchases?
Yeah, so it's actually a very interesting report because the numbers themselves were extremely strong, both on revenue, on earnings. Gross margin came in at a whopping 29.5%. They guided to 28 to 28.3. So you came in about 3 or 4 points higher on a percentage basis than your estimate on the margin side. On the guidance, though, new orders are relatively soft, as you mentioned. Deliveries are improving. They did say that supply chain is really improving. They said, and I quote, "Our cycle time during the quarter increased only slightly sequentially, so it appears that the well-documented supply chain issues have started to subside." That's good news. That's a big change from what they said last quarter when they said there's basically no relief that they're seeing. What is interesting here, and getting back to what we said earlier about GDP, and that is, pull up the exact quote here. They said, while our second quarter results demonstrate strength and excellent performance, the weight of a rapid doubling of interest rates over 6 months, together with accelerated price appreciation, began to drive buyers in many markets to pause and reconsider. We began to see these effects after the quarter end, which means in June. So anyone who's looking for a pickup in economic data is looking at the wrong thing.
Yeah.
And I think that if we're already at 0 through May, we're going to be negative by the end of June. So they're saying that we need to go through a rebalancing. This commentary is vastly different from what we've seen from the home builders for the last 18 months. They're focused on traffic affordability. Affordability is something that we haven't seen them talk about. Pricing on new orders was a slight deceleration from the prior quarter. They're still seeing low cancellation rates. They're still seeing low unsold inventory levels. Having said that, they've seen some softening, and we haven't seen it even in the data yet.
Yep.
We're going to see that in the next quarter. So that's something to really be aware of.
They are seeing some relief on the supply chain, which hopefully is a positive that will go beyond just the housing market and into other areas. That's a bit of relief, but kind of interesting. We have the quote here that guidance is more guessing than guiding. I mean, there's a lot that's unknown here. What is known is a change in trends in the first early weeks of this quarter. Looking ahead this week, we have Jay Powell testifying before the Senate tomorrow. Jobless claims on Thursday. I think that continues to be an interesting data point. Powell will testify before the House on Thursday. We will get earnings from FedEx Thursday evening. Bullard talking on Friday. What else are we keeping an eye on, Ben?
I think we still want to look for any signs that inflation is easing, and that who knows where that would come from. KB Home does report later this week, but more comments like we just heard from Lennar that they're focused on affordability. That's code word for lower prices. More comments that they're seeing deceleration in pricing on new orders in their backlog. More evidence that oil prices have peaked out for at least a period. I think that's all going to be stuff that we need to watch, because that even just an interim pause in the inflationary impetus can help to stabilize this market. And I think that's what we're seeing today.
Awesome. We will wrap it up there. We will be back tomorrow morning. Hope you guys have a great day, and we'll talk to you soon.